Exactly, sir.
Oh, thank you very much for that feedback. Okay. So, the last time we looked at the second chapter, which is the regulatory environment, which has been our conversation. On Thursday, we started that journey on the regulatory environment. So today we want to continue and see if we can wrap up chapter 2 so that we can move to the question and answer session. We looked at the first unit speaking to the need for the regulation of audit and assurance services. And the second unit, we spoke to the IASB, the International Audit and Assurance Standard Board Special Project, and the reviews and updates of our ISAs, ISQCs, ISREs, and all the standards that needed updates come 2009. So we looked at them and we were able to wrap up 2 units of chapter 2, the regulatory environment, last week. So the videos are on YouTube already. So if you are not in the class, you missed it, please go back. And if you still need a recap, you can go back to the videos on YouTube to refresh yourself on what we talked about. Okay, so today we'll be looking at Unit 3. We'll be continuing from that conversation on Unit 3. And we'll be talking about corporate governance. Corporate governance is an integral part of your exams and is a frequently tested area the examiner loves to test because it's practical and it's applicable and relatable to what we do as chartered accountants and as auditors. So we'll be looking at the sections under corporate governance. The first section is the meaning and nature of corporate governance. And the second, speaking to directors and auditors' responsibilities. And the third one, the Code of Corporate Governance in Nigeria, which came in 2018, or the update of 2018, the Code of Corporate Governance of 2018. And finally, we'll be looking at the Audit Committee, which is a frequently tested area also, the Audit Committee and their duties. Okay, so let's speak to the meaning of corporate governance and the nature. The way an organization is managed, controlled, focused on directors' responsibilities to stakeholders, speaking to the agent-principal relationship, is exactly what corporate governance is all about. The management and the control, the management and the control. So directors are agents and the principals are either the shareholders or the stakeholders, the owners of the company. So the way, speaking to the pattern, procedures, a company is governed, speaks to what corporate governance is. So in simple definition, the way a company is managed and controlled is what corporate governance is all about. So the directors' responsibilities, their fiduciary duties to their owners or the shareholders, and the responsibility of due care and managing the company well is what corporate governance is all about. Now, the divorce of ownership and management, speaking to the directors who are the agents, like I spoke about, and shareholders who are principals. The directors are to act in the shareholders' best interest, and they should be accountable to shareholders. Now, the shareholders also are obliged to pay and remunerate the directors for acting as agents. So there is a divorce. What does that divorce mean? Management are different from shareholders. So there is a separation between management and shareholders. Shareholders employ directors or management to run the company in their best interest and to be accountable to them. So that's why there's a separation, speaking to that word or using the word divorce between management and the owners of the company. So there's a need for regulation, and that brought about corporate governance. The basic legal requirements proved insufficient, speaking to specific regulations and guides. So, for example, the Code of Governance, corporate governance, was introduced to improve protection of shareholders, owners of the company, from crooked agents, directors that run down the company, that don't run the company in the best interest of the shareholders. So corporate governance came up as a result of some corporate crashes, audit failures, issues that were governance related, that brought about the Code of Corporate Governance, to have a guide, to have a stated document to help directors be guided accordingly in running the affairs of the company in the best interest of shareholders. And that was why the need for regulation of company practices, public interest companies, public listed entities, and the Code of Corporate Governance is a global phenomenon, not just in Nigeria. Globally, a lot of countries, jurisdictions have their codes of corporate governance that provides a framework of how an organization is supposed to be run to protect shareholders' interest, investments, and their value. This is very important. So that's briefly the nature and the meaning of corporate governance. So like we said, we'll be as brief as possible. I believe we'll still go back to our study text to elaborate on what we've talked about. So this is just a picture of what it looks like. We'll still read our study text, which I suggest and I urge us, because most of the sessions will not be as elaborate as what is in the study text, but we'll capture the main points. So go back to your study text, and if you have any questions, feel free to interject and ask very promptly. You can raise your hand and I'll halt and give you the floor to ask your question or your contribution or any concern you have concerning the subject we are talking about. Okay, so that's briefly speaking to what corporate governance, the nature, and the meaning is. So let's look at directors and auditors' responsibility in this second section. What are the responsibilities of directors and auditors? Principally, we know these are the responsibilities of directors. Number one speaks to preparation of financial statement. That is their job and not the job of auditors. So they are to prepare. I'm speaking to them as the makers. They make the financial statement. They design and implement internal controls. That's the job of directors. The design and implementation of internal controls is the job and primary responsibility of directors. And also the provision of access information in written representations to auditors is the responsibility of directors. So please take note of this, because they are always confusing, especially under exam conditions, and candidates feel some of these responsibilities are that of the auditors. So these are principally directors' responsibility, and the auditors are responsible for checking. So we have the maker and the checker in the form of reviewing information provided to them and also reporting on the director's compliance on the financial statements they've prepared, and also providing an opinion on those financial statements, whether they are presented truly or fairly based on the state of affairs of the company as at that period in time. So basically, the responsibility of directors is to prepare financial statements, design and implement internal controls, provide auditors access to information, and it should be in writing. And the auditors are responsible for reviewing the information and reporting on the director's compliance to the regulatory framework, to laws, internal and external, and also to express an opinion on the financial statements, on their true and fair view. So this is very important, and this is primarily the responsibility of directors and the auditors. So speaking to clarity on ISA 210, which recommends us or recommends the clarification of the responsibility in engagement terms. So when auditors are engaged, a letter of engagement is written, and these responsibilities, like we said, must be in writing. So clarity must be provided as to the terms of reference of each party's responsibility. This is very important. So ISA 210 provides clarity on this, and the engagement terms must be in writing, written representation, so that there won't be any friction or issue when it comes to the engagement proper. Each party knows their responsibilities and what they are to carry out. This is very, very important. Okay, so but that's basically directors and auditors' responsibility. So most questions that come in this area are expanded. So where marks are allocated to questions like this, and they are, you need to elaborate on them. You can build flesh, but these are the main points, the main body, or the main headers you speak on and you write on responsibilities of the directors and auditors in audit engagement, speaking to corporate governance. Okay, so let's look at the Code of Corporate Governance in Nigeria, speaking to the third section of our discourse on corporate governance, the Codes of Corporate Governance in Nigeria. So we have the CBN code, which is one of them, and that's for banks and other financial institutions. So the CBN code is a corporate governance code for banks, and mandatory compliance is very, very important. In fact, mandatory compliance is necessary and it's not voluntary. It's mandatory. So compliance is mandatory for banks to follow these codes. We also have the Security and Exchange Commission Code for public companies, companies that are listed, those that are seeking listing and capital on the floor of the Nigerian Stock Exchange, other public interest entities and companies. So the Security and Exchange Commission Code is mandatory for such specific companies and encouraged for others in this space. Most of the codes are online. I could share some of them so you could go through them and have a read. Though the documents are actually long and they are in the PDFs, so I can share some of them so that you can have a glimpse of what corporate governance is for banks, for public listed companies, and public interest entities. So like I said, the Nigerian corporate governance was harmonized by the Financial Reporting Council of Nigeria, and it was effective January 2019. So it was a code that came up in 2018, and it replaced the existing codes, and it was harmonized for companies in Nigeria. So that's briefly the Code of Corporate Governance and the laws that govern companies in the country. Okay, so the last session we'll be looking at on corporate governance speaks to the audit committee, very important area, the audit committee. There are other committees on a company's board, but this is one of the pivotal and very, very important committees, and that's why the Code of Corporate Governance has stressed this committee. We have several committees. We have Risk Committee, Remuneration Committee, we we have ethics committee. We have so many committees that sit on a board of a large company. But the audit committee is very significant and important because of the function it performs. The function it performs. And it's a significant area the examiner always tests very frequently. Very frequently. In the last diet, he still brought it. So it's an area we should take note of, and their duties, their responsibilities, we should be conversant of, so we can write and also understand how in real practice this committee functions. So the purpose is to act as a buffer, act as a bridge between directors and auditors. The audit committee is a subcommittee of the board of directors of a company, an entity, a listed company, a public interest entity. They report directly to the board of directors. They act as a buffer, as a bridge between auditors and the executive directors. And they consist of mostly independent directors, that's non-executive directors. So we have the executive directors, those that run the business day to day. And we have non-executive directors, those that don't involve themselves in day-to-day activities. So executive directors are directors that provide day-to-day activity, while non-executive directors provide oversight and supervisory activity. So both are on the board. That mix is very important on the board of directors to ensure a proper check on the activities of the executive managers. So the executive directors may want to suppress the opinions or the findings of the auditors, and the audit committee, mostly that are non-executive directors, come up to act as a buffer, as a bridge, as a defense, especially where the auditor's findings are significant and attainable. So the audit committee ensures the auditor's independence is not impaired or jeopardized, and also minimize undue pressure from executive directors on the auditors. So the audit committee is a very significant and important committee on the board of any company. And the composition includes 5 members speaking to 3 shareholders and 2 non-executive directors. So 3 shareholders speaking to the owners of the company, and also 2 non-executive directors with financial expertise and knowledge. In Nigeria, mostly the requirements are they must be financial literate, and at least 1 member is an ICAN member. So most audit committees, you find a lot of ICAN members, they are non-executive directors, chartered 1, 2, 3 or so, just to ensure that financial statements are understood, scrutinized, and findings are properly presented to the board from these experts. Very important. So the remuneration of these members of the committee are presented to shareholders. So members presented to the shareholders are not remunerated because shareholders are the owner of the company. But those few members that are not shareholders, the 2 members or so, or whichever number that were elected, are subject to annual re-election. Don't forget, in the composition, we have 3 shareholders and 2 non-executive directors. So these 2 non-executive directors are remunerated. And their remuneration is provided or stipulated by the board of directors or the shareholders on that committee, subject to annual re-election. So the audit committee members are not remunerated, or their remuneration are provided by the remuneration committee. Why? Is because the remuneration committee consists of executive directors, and the independence of the audit committee is also important, And that is why shareholders provide the remuneration of the audit committee, not the remuneration committee. Very important. So the nomination to become a member of the audit committee is provided within 21 days to the shareholders at the annual general meeting. So audit committee members are nominated, especially the standing two that are not shareholders. And also shareholders of a company elect or nominate the 3 shareholders that will act as audit committee members. And the names or nominations are provided within 21 days notice to the annual general meeting of the company. Now, the duties of the audit committee based on the Security and Exchange Commission Code and the Company and Allied Matters Act is among a lot of activities. They have a lot of activities and functions and duties, of which the examiner tests very frequently. He hardly tests the composition, the definition, remuneration, the duties, and the function of the audit committee is where the examiner tests very frequently. If you look at his past questions, his trajectory has always tested this area very frequently, including the just concluded diet, May 2025. So one of the duties is the oversight of financial integrity. Thank you. UK, please go ahead, UK.
Oh, please, I'm always a little bit confused about these duties and responsibilities. I think they are the same, right?
Yes, they are the same. They are the same.
Don't
get yourself confused.
You see where they will write this and they will write duties and they will still write responsibilities. I was not like the last exam.
Of course, it's the same. It's the same. Once they say duties and responsibilities, they are all the same thing. So don't get yourself worked up. So where you're writing about duties, responsibilities, they are the same. They suffice. Like you see on the slides now, we're going to speak to the duties. Hardly will you see anywhere where they separated it and said, okay, these are the responsibilities. So it's the same. Duties, responsibilities of the audit committee are the same.
Functions are the same also.
Of course, functions are the same. Exactly. It's what they do. Yeah, you're welcome. Okay, so one of the duties, providing oversight of financial statements and the integrity of the same, compliance to legal and regulatory frameworks or laws. So compliance to internal laws and regulations, external laws and regulations are the function of the audit committee. So principally, normally big companies have compliance departments or compliance functions that are the second line of defense. So mostly the audit committee concentrates on external compliance to laws and regulations so that there won't be duplication of effort. So where we have the risk and compliance committee, or we have the head of compliance, they concentrate more on laws, internal policies, SOPs, and the implementation of the same. Then they do more of a little on external regulations, but mostly the oversight of that area is performed by the audit committee. So the financial statements is a cardinal duty to ensure its integrity, its trueness and fair view, and that it's prepared by the executive directors and the auditors audit it in line with best practices and applicable framework. This is very important. So oversight of financial statements integrity, legal regulatory compliance to laws, external mostly, are the duties of the audit committee. Second one is access. They access external auditor qualifications and independence. So external auditors are assessed by the audit committee, their qualification and their independence mostly to ensure that a proper and quality job is done on the financial statements audit. So most of the time, the audit committee sits to appoint or during the board of directors. The board of directors appoint, but they provide recommendations and input to the appointment of auditors, external auditors. Very important. So they assess their qualification and independence. And most of the big four, most of the big entities, public listed companies, public interest entities that are big, they do more of the big four. So the bidding process to choose the auditor they need is principally provided, and the input and advice by the audit committee to the board of directors for selection. So they assess the external auditor's qualification and their independence. Another duty is to oversee the performance of the internal and the external audit functions. They oversee the performance. So the internal audit and the external audits, based on the Institute of Internal Auditors 3 lines model. There's what is called the 3 lines model, the Institute of Internal Auditors promulgated. So the first line are process owners, people that bring the risk to us, auditors, people that provide the invoices, the transaction day-to-day, managers, head of department. So those are the first line of defense based on that model. Then you have the risk and compliance. There may be internal control if those departments are separate. But principally, we have the risk and compliance as the second line of defense that assess the risk, that provides a defense to the activities of the first line. So risk and compliance come as second line of defense based on that global model. Then the third line are the internal and the external auditors. So the internal and the external auditors form the third line of defense in the sense that they assess the functionality of the second line. Are they managing risk well? Are they ensuring the organization complies to internal and external regulations? So the internal auditors are mostly employed by the organization. Then the external auditors are independent to the organization. So both of them are supposed to be independent, but there's a level of independence the internal auditors have because they are inside the organization. So the internal and the external auditors, based on the IIA's 3 lines model, are in the third line of defense. And the third line of defense ensures that assurance is provided on the risk, the governance, and the compliance framework of that organization. So the audit committee sits to oversee the performance of this third line of defense, as you can see on the screen, the internal and the external audits functions. So the audit committee oversees and provides oversight to the performance of these 2 critical functions in an organization. Very important. Also, the next duty, the function, responsibility is to establish an internal audit function and a comprehensive internal control framework. So most big organizations have internal controls department different from internal audits. And you may see internal control also as the second line of defense. And the job of the audit committee is to establish an internal audit function. So the internal audits looks at the risk assessment framework, looks at the general controls in the company. So the internal audits is not just restricted to financial statement audits like the external audits. The internal audit assesses every department in an organization. So just like internal controls, some people will ask what's the difference between internal controls and internal audits. So internal controls are frameworks that check that procedures, policies are working and they are applicable to day-to-day framework. Then internal audit provides assurance on those controls. So it's Maybe small organizations will say internal control and internal audit officer, fine. But for big and large organizations, those functions should be separated to have the value drawn from those functions. So the internal audit function provides assurance that the internal controls, the risk, the compliance frameworks are working as intended. So the audit committee is to establish these functions. That's their job. So when we come to the topic on internal audit, we'll see where situations arise that the audit committees or organizations outsource the audit function or employ a staff for the internal audit function. So these activities are the function and the duties of the audit committee. Also, the audit committee reports annually on internal control effectiveness to the board. So they report on internal control effectiveness to the board of directors. Normally, where there's a head of internal control, he has an administrative line to the CEO, and some allow a functional line to the audit committee, just the same way the internal audit does. But where the internal control reports directly to the CEO, the internal audits have both dual reporting lines. They report to the CEO administratively, and they report to the audit committee, very important, functionally. So the audit committee ensures that the internal control effectiveness and also the internal audit's provision of assurance on this effectiveness is provided, and the report is presented to the board annually. Also, the audit committee oversees fraud risk identification, and there are some committees that are merged. You hear risk, audit, and compliance committee. So where it's merged, the risk department, the chief risk officer, the head of risk, where those designations are applicable, report to that committee that is merged, risk, audit, and compliance. Some separate it. And where you have fraud risk identification, the second line of defense, which is risk, provides that oversight, and internal audits provides assurance on the effectiveness. So the audit committee oversees these activities among the lines of defenses of an organization. So the risk department provides maybe their annual risk assessment or quarterly risk assessment, speaking to the identification of risks, the evaluation of risk, providing mitigants to those risks, putting controls in place and all that. So all these activities around the risk department, the audit committee or the risk committee, as the organization, separates or integrates them together, oversees the fraud risk identification, prevention, detection, and reporting of these risks. So the audit committee is pivotal to ensuring that issues of fraud are minimized to the barest minimum. They cannot annihilate it. You cannot annihilate fraud in an organization, but you can reduce it with the controls and measures you put in place. This is very important. Also, another function, another duty, another responsibility of the audit committee is to review internal audit report. So most of the time they do on a quarterly basis. So I report to the audit committee as an internal auditor, and we do quarterly reports to the audit committee. We do monthly reports to the CEO administratively on a monthly basis, but the internal audit reports to the audit committee on a quarterly basis. And most board meetings are quarterly, so you report to the audit committee, but the external auditors report annually once a year on the financial statements. So the review of internal audit report on internal control strength, quality, an assurance that internal controls are working is the responsibility or a duty of the audit committee. So the quality or internal controls mostly report annually, subject to the arrangements, internal audits, internal controls, whether quarterly, whether half-yearly, whether yearly. But then there's a frequent reporting period in a year as agreed by the audit committee for them to also provide their own reports to the board. This is very important. So the review of internal audit report is a function of the audit committee. Also, another function is to discuss annual half-year financials with management and with external auditors. So the discussion of the financial statements, interim reports, half-yearly reports, annual reports, the issues, the findings is the job and oversight function of the audit committee also. The interface within the board, between the board and the external auditors to discuss generally the issues and how to resolve them, especially where you have significant findings that would affect decision-making of the shareholders. So before it gets to the AGM, discussions are held on the resolutions and deliberations to resolve those issues before it gets to the shareholders. So that's another important function of the audit committee. Also, another function is to discuss risk assessment and management's policy. So like I said, where the activities of risk compliance are within the audit committee's purview, the audit committee provides this oversight. And where they are merged, which is mostly a predominant practice in Nigeria, you see the risk audit compliance and risk audit and compliance committee are merged together because of the expertise of the board of the committee members. So the audit committee generally discusses the risk assessment and management policies of the company and if they work and are functional and staff and stakeholders follow them. Also, the audit committee meets separately with management, internal auditors, external auditors to discuss areas of concern. So separate meetings, separate forums are created to independently hear out these functions, the internal auditors, management, external auditors, on issues that, or issues of concern, areas that need attention, that the audit committee needs to bring to the attention of the board of directors. So that separate meeting is a function, and the audit committee is to make that happen to ensure that independence, objectivity is ensured. Also, the audit committee reviews whistleblowing policies and procedure. Whistleblowing policies and procedure. The objective is to ensure that irregularities and fraud risks are assessed. So whistleblowing policies, whistleblowing reports are reviewed by the audit committee also to ensure that the organization is free from prevalent fraudulent activities. And this is reduced to the barest minimum. Also, another function is to review audit scope, limitations, the problems with the external auditors, whatever is the external auditors are having, challenges around the audits. The audit committee sits to hear and to provide solution and ensure that the external auditors are doing their job properly and independently. Also, the audit committee reviews the external auditors' independence, especially for non-audit services conflict. So they review their independence in the sense that external auditors providing statutory services, annual audit reports, are not allowed to provide any other audit services or non or assurance services to the company. So they review that, which is the job of the audit committee. You are engaged for audits only. So do your audits and go. You're not to prepare financial statements. You're not to provide any non-assurance engagement. So there won't be conflict of interest or overlapping of duties or overlap of duties. So they ensure that there is no services conflict if an external auditor is engaged for the review of financial statements, annual review of financial statements. Every other services could be provided by other professionals or specialists that will be engaged separately and not by the external auditors. So external auditors that are asked to provide audit and assurance, annual audits and their opinions on the financial statements are not allowed to provide any other services. Maybe in the course of their audit services, management say, oh, we want to take over another company. Can you help us assess the viability of the project? No, the audit committee comes in to say, no. Their job is to provide financial statements. So management allowed them to do their audit job alone. So scenarios like that are the job of the audit committee to ensure the external auditors' independence and provision of just audit services as they are engaged. Also, the audit committee sets clear hiring policies for former independent auditor or employees. Of course, auditors could be employed as employee of a company, but there are policies and there are procedures for that to ensure that there are no conflict of interest and there are no double dealing where an auditor is working in a firm and is also working for the company, in the sense of being the judge and the jury or maker and checker at the same time. So the audit committee ensures there are clear hiring policies. The auditor has resigned for long if he wants to work with the company. He has resigned for long or for a period of time, and confirmation from his employer has been provided to the audit committee, and so many nitty-gritties are in place to ensure that hiring policies of former independent auditors or their employees don't breed conflict of interest. So the audit committee sets a standard, a benchmark, and they set clear hiring policies for such engagement. Of course, auditors move to organizations that either pay better or they find their policies or their products or services are appealing to them. So auditors could join organizations as either accountants or finance managers or even directors, but policies and procedures must be in place, and the audit committee ensures this. Also, in recent terms, related party transactions, speaking to ISA 550, the audit committee lately has been looking at that. Globally is generally a practice to look at related party transactions because prevalent fraudulent activities have been permeating around this area. So the Corporate Governance Code has prompted the audit committee to consider related party transactions, looking into them as presented in the financial statements. Also, the investigation of matters within the terms of reference and within the resources provided to the audit committee is another function they provide. So internal auditors provide assurance, and the issue of fraud investigation, speaking to magnanimous frauds or very heavy significant frauds, may be ceded to external fraud investigators. But the need for outsourcing of fraudulent or fraud investigations is within the terms of reference of the audit committee. So the internal audit unit may have a fraud case and reports it to the audit committee. And looking at the magnitude, the audit committee may recommend to the board to employ a specialist, a fraud investigation, to come look into it And where their resources and expertise could handle it, the audit committee provides advice or could investigate the matter based on the human and financial resources within their purview. So that's also a function of the audit committee. Another function is to regularly report to the board quarterly, half-yearly, yearly on matters such as financials, internal controls, internal audits, external audits, and every area we've looked at previously. The Companies and Allied Matters Act updated and added lately that the audit committee should ascertain accounting and reporting policy compliance as part of their oversight functions. So they should ascertain accounting and reporting policy compliance to IFRS, to whichever framework that company is using, and also review audit scope planning. So most audit committees, you see them asking us or the internal auditors to provide our audit plan. And also review management findings with external auditors. So where management's findings are provided for their responses, the external auditors should provide these findings also after the responses from management to the audit committee to see the significant high-risk areas, the medium risk, the low risk, and the process improvement observations. Also, the audit committee is to review internal control effectiveness, like we said, recommend during board and AGMs the external auditor's appointment, removal, remuneration, authorization of internal auditor investigations. So these are all injected by the CAMA recently to capture or expand the function or the duties of the audit committee. So it's a significant committee, and the board and corporate governance is really interested in this committee. That's why their functions are enlarged. So we have over 15 functions or more, and the examiner tests this area very frequently. So please go back to the slides, and as we go to the question and answer session, you will see most of the areas that were tested in previous diets on this section, the audit committee. Okay, so that will be the end of this section on the audit committee. The next unit is money laundering. Okay, Keller, let's have you. Please go ahead, Keller.
Good evening, sir. Good evening, everyone.
Good evening. Good evening. You're welcome.
Yes, sir. We are talking about corporate governance.
Yes, please.
I just want to find out, sir, outside the objectives of maybe ensuring the rights and responsibilities of the principal and the agents. I want to believe also that is also geared towards ensuring effective sustainability of organizations. I just want to be sure of that, sir.
Yes,
Good.
yes, exactly.
Good. That being the case, sir, I have a concern here. My concern is about the incessant failures of most organizations. You know, especially from the bank sector. You know, so many things happening, and lots of people losing their funds and all those things in the midst of corporate governance, its objectives, policies, and everything put in place. And we have rightly gone through the oversight functions of audit committees, because I'm seeing them as playing a very major role here towards compliance to all the rules and regulations enshrined in the corporate governance. Outside the audit committees, sir, is there any organ from, let's say, from the federal government, from the government side, that also are supposed to have some oversight functions over all these organizations to ensure that the objectives of corporate governance is achieved, so that, especially on the sustainability of a governance, because I'm seeing it that audit committees might not really come up with the right punitive measures for erring organizations, any of these and any of all those objectives. But if there is any organ of the government that is also charged with that oversight function, they might be able to come up with the right punitive measures. I just want to find out, sir, outside organizations, from the side of the government, especially now federal government, do we have some organs of the government that are also charged with some responsibilities to make sure that organizations adhere strictly to the provisions of the corporate governance? That's my question, sir.
Thank you very much. A fantastic question. Fantastic question. So looking at like you said, sustainability. I love that. And sustainability is looking at the going concern and the future prospects. The organization operating in perpetuity. So you don't have any issues, you don't have any setbacks, bottlenecks that are sitting to halt the existence of that organization. So sustainability is very key to ensuring that companies are futuristic in their approach. So I agree with you that sustainability is key, especially the coming of corporate governance and the codes and everything that it has installed. So now, in answering your question, looking at the crashes of most banks, mostly banks, other companies have crashed, but significantly, like you said, banks have issues. So the CBN code is a corporate governance code that regulates banks very importantly. Now, if you look at the crash of Heritage Bank's license was revoked, specifically June 3rd, 2024. If you followed the gist, the conversation, looking at breaches and prolonged financial decline of Heritage Bank, despite they have several supervisory interventions from CBN, which is a capital regulator of the banking practices in Nigeria. You see that the license of Heritage Bank PLC was revoked of recent. That's very recent. It's not an old crash so that failure of Heritage Bank and the regulation by CBN, speaking to close monitoring, like you said, is one of the kudos I'll give to corporate governance in Nigeria. Though a lot of people lost their funds, their investments, but then they had a buffer from NDIC providing them at least not losing everything 100%. But then, like you said, the audit committee is not sufficient enough. Of course, they have their terms of reference, and they also have their areas of strength and weakness, and they also have their limits. Now, coming in to companies and other areas, the FRCN has
sorry, sir.
very
I'm
early.
sorry.
Yes.
I'm sorry to cut you in here, sir.
No problem.
Now,
Go ahead.
You just cited a very good example, Heritage Bank.
Yeah.
And the withdrawal of their practicing license. I just want to find out, sir, at what point did CBN withdraw that license? Did they do that right from the time, maybe when they carried out some inspections, they found out that they were not adhering strictly to these policies? Did they sound some note of warnings, or did they just wake up and just, withdrew their license when things had already gone so bad? I mean, irredeemable kind of. I just want to find out, where are we getting it wrong in all these areas? Because it would be medicine after death to withdraw their license when things had already gone so bad.
Thank you very much. So there's what is called stress test. And CBN performs that stress test on banks' directors frequently. In fact, mostly they do it yearly. So when they begin to see your financial returns, your financial statements, your IFRS 9, speaking to your loan portfolio and your what do they call that, this thing on loan portfolio, the credits you give to the loans that are given. So they look at your receivables, they look at the agings of them. So it's a frequent review, and there are departments under the CBN that carry out that. So it's a yearly thing, and they don't just come up to revoke license. They see some signals. In fact, they perform stress tests on the directors to either change them or replace them, especially when the performance of a company or their books are not speaking to good performance. They begin to see how to change the director. So it's a procedural, it's a process, and it's a yearly thing, it's a long. So before 2024's revoking of their license, you see that this rumor started since 2024 years ago. I started hearing Heritage. My wife banks with them. So I started hearing issues with Heritage 2020, 2021, 2022, 2023, like that. So it may be salient, but then the CBN tries to see how to inject funds, how to revive the company, do a lot to preserve shareholders or the public's deposits. But where management and the systems have failed, they have no choice than to revoke the license. So it's not out of the blues, they just come up and take their license. No, there are a lot of activities that has gone under. They may not be announced, except if you are following closely what's going on before you know what's happening. Currently, Fidelity is having some little issues now. A lot of people are scared. So there are signs, and you see the CBN coming as a corporate governance regulator in that space to ensure that there are no crashes and all that. Did that speak to your concern?
Thank you so much, sir. Thank you.
All right. Thank you for that conversation. And like I said, the FRCN is coming heavily with ICFR. That's part of the updates we'll be looking at, internal control over financial reporting. So the internal controls are very important for ICFR, for the regulators, especially for companies. So FRCN has come up with ICFR, though it's updated in this current syllabus, and that's part of the checks. That's part of the regulators, corporate governance regulation, to ensure that external auditors will assess the internal controls on how the financial statements were generated or produced. So they ensure that internal controls are working, not just financial statement review. It could be reporting losses from your financial statements, but then they ensure that ICFR has come for banks, for public listed company, for public interest entities also from 2024 also. So like these crashes are not just your concern, they are also a concern to our corporate governance players in government. And they want to ensure that they put a stop or reduce these crashes to the barest minimum. So thank you for bringing that to the fore. And I appreciate that. Any other question?
Thank you, sir.
You're welcome. Any other question before we move to money laundering? We are just 2 minutes or 1 minute to break time. Any question, any contribution? Such conversations are very important so that we can glean from what is happening. So that question, that contribution, it's necessary. We need it. So any question, any contribution, so that we can go on a 10 minutes break.